Hello and welcome to Credit Matters TV. I'm Luciano Gremone, Director and Analytical Manager. Brazil's foreign currency rating was raised to BBB last November 2011, bearing a credit profile relatively more stable than most of its Latin American investment grade peers like Mexico, Colombia, Panama, or Peru, and compared with other global peers like South Africa, China, India, or Russia. However, some of Brazil's main credit characteristics make it less dynamic than most of the peers or the global peers. Joining me today is Sebastián Brioso, Standard & Poor's sovereign analyst. He will further discuss about how Brazil compares with its global peers at its rating category and how the country stands in the current global scenario. Hello, Sebastián.
Hello.
Sebastián, what about the main credit strengths that Brazil has compared with its peers within its rating category?
Yes, we actually published an article recently doing these comparisons and with the large investment grade emerging markets you mentioned. And what comes out from the article, from the research, is basically that on Brazil is a much more stable credit, and this is basically anchored on two main areas of the analysis. On the political front, where we see well-established democratic institutions, political parties, a level of transparency that is greater than in many of the governments and countries you mentioned, and a system that has been tested to the alternation of power between political parties of very different political origin. So that's a key factor because it significantly reduces the risk of policy reversal in the orientation of economic policy. The second factor within the strength, I guess, is related to the economic structure. Brazil's economic structure is very well diversified. It's not as dependent on external demand such as the others, large emerging markets. Economic growth in Brazil since 2005 was primarily based on domestic demand, and exports to GDP are roughly 12%. So these issues are particularly important at times such as the ones we are seeing today of very uncertain global markets, great volatility, and expectations that global GDP growth would not be really high over the medium term.
And what about Brazil's relative weaknesses?
Well, it's interesting that the strength is stability, but really on the weaknesses side, what we see is Brazil is less dynamic than many of the peers. Basically, if we take GDP growth, per capita GDP growth over the last 10 years, Brazil's GDP growth has been close to 3% compared to 5% in Peru, almost 7% in India, or 8.5% in China. And looking to these things, basically the most important indicator that reflects this disadvantage is the level of investment. Basically, Brazil, despite all the increases in investment we've been seeing, investment to GDP is only close to 20% of GDP, and compares unfavorable to the peers as well, to about 28% in Peru, close to 35% in India, or about 50% in China. So the interesting factor is that some of these weaknesses are actually the result of the stabilization process that Brazil went through over the last decade or 15 years, because really investment to GDP is low because through the consolidation policy of the fiscal sector of Brazil, public investment has been significantly reduced. And on the other hand, basically, in order to stabilize inflation, interest rates were increased significantly and remain much higher than many of the other credits we are seeing.
And how do you see these main credit characteristics evolving over time and therefore having implications for Brazil's sovereign rating?
Well, in all these factors, we've been seeing continuous improvement over recent years. Those improvements led first to the upgrade to investment grade, and in 2008, and later to the upgrade to BBB last year. However, although we do see some continuous progress on these factors over the medium term, we also believe that this progress will happen only gradually. If we were to have implementation of more comprehensive structural reforms in Brazil, such as reforms to the pension system or to the tax structure, reforms that will significantly improve Brazil's fiscal flexibility more rapidly, we believe that this could have more material or more rapid implications on the outlook or the rating. However, these reforms have been under discussion in Brazil for many, many years. They are very difficult to implement, and therefore what we see going forward is a gradual improvement in these factors going forward, both at the macro level, where gradual fiscal consolidation will lead over time to greater room to maneuver, and allow at the same time more space for monetary policy flexibility reductions on the interest rate. But again, the outlook is stable at this point, and we see this upside risk and downside risk to the rating balance at this point.
Okay. Thanks for your time, Sebastian, and thank you for joining us on Credit Matters TV.